Hello traders, Gary Wagner here. Just about 11:45 in Honolulu, 4:45 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. January 27th, 2017, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen in this market. With the first week concluded of Donald Trump's new presidency and this new administration, we saw gold trade under tremendous pressure this week, actually moving lower for the first time in the last 5 weeks. Up till now, each week has been characterized by having a consecutively higher close, higher high, and higher low than the previous week. As we look at gold trade today, 1190.60, putting it up about 80 cents on the day, a fractional change at best, the low 1179 and the high 1191. So as you can clearly see, not much movement in the marketplace today, closing much closer to the highs than the lows. Now, silver really did perform quite eloquently today, actually moving up almost 2%, a 30-cent gain at 17.15. This is March futures with a low of 16.63 and a high of 17.26. Of course, we had active trades in both gold and silver that we covered with small profits earlier this week. When we pull up our first gold chart, we will go over those trades in detail. So traders, even with today's fractionally higher close, there's absolutely no doubt there was some major chart damage that was accomplished and some bearish sentiment that definitely entered the market this week, as seen by this weekly bar chart and this single large red candle. Because over the last 4 consecutive weeks, we have seen the characteristics of gold in which we saw it move from what? Roughly about 11.23 up to about 12.23, about a $100 rally, have in essence 4 consecutive weeks in which we saw this market trade to higher ground. Now, this week certainly was the beginning of some sort of a turnaround, and so we did pull profits on our trade. We entered the market at 1180. We also took on another position roughly at 1203. As the market began to come down, we exited all of our trades at roughly 1199, 1198. As I said, for a small profit. We gave up a lot because at the beginning of the week it was much higher, but no doubt we did end a trade that was profitable, not only in gold, but also our silver trade. So the next real question has to be, now that we've got this particular sell-off firmly in place, where can we expect gold prices to find some support? And to do that, we need to create a new Fibonacci retracement. And traders, to that end, I have created a new chart with a new Fib retracement as well as a Fib extension so that we can look to forecast not only the correction that I believe began this week, but also where we can attempt to find support in the market, and then from there, where the next rally might in fact take us. In other words, a forward look at our current model. Now, I am under the assumption that this last rally in which we saw market prices move from about 1123 to about, call it 1223 or 1220, has concluded. Now, it could turn around next week. There's absolutely no doubt. But my sense is we have seen a conclusion. So we have created a Fib retracement from 1124 on the bottom to about 1220, a $100 move. And when we plot that, we get various levels. Now, the first thing is that 38% retracement comes in at 1183. And the low this week came in just below that at about 1180. You can see that by this wick right here. So we did close above that. Earlier in the week, we had this line actually down and a solid, much greater red candle, but we did get some recovery. And a shallow correction will typically be a 38% retracement. So that's not that unusual. However, we don't have any concrete signs that this correction is over, but realistically, we can look to see if gold prices find some support at this particular price point. Should they find support, then we would recalculate, because what we are anticipating is the potential for a deeper retracement, maybe as much as a 61% retracement, and that would take gold prices down to 1161. And as you can see, what I've done then is plotted the potential for a correction that took us to a 61% retracement, concluding at around 1160. Now, here's where it gets fun in terms of forward modeling, because that would mean that we have a wave 1 here. We would then complete our wave 2 here, and we would go into a third wave here. Now, the reason that third wave is quite interesting is one of the Elliott wave guiding principles is that on the impulse side of it, a wave 3 cannot be the shortest of any of the impulse waves. And of course, there are going to be a total of 3 impulse waves spread between 5 waves. So waves 1 is impulse, corrective, wave 3, impulse, 4 is corrective, and then wave 5. On typical models, you look for waves 1 and 5 to be about equal, and then you look for wave 3 to always be the longest of all of them. Now, that being said, once we have that correction not only firmly in play, but having seen it conclude, we can then run a fib extension to determine different levels. So even if wave 1 and wave 3 are equal, remember the logic or the actual rule is it can't be the shortest. So it could be equal to 1. Even that being said, that takes us to about 1263. That is a 1-to-1 relationship of wave 1 and wave 3. A 1.382 would take us to 1302. And then a very, very nice impulse wave would go as high as, well, it could go higher, but 1.618, and that would take us to 1326. Now, we're not looking at any kind of timeline here, but what this tells us is that there's truly potential once we finish the correction to have this next upside wave take us well back above 1200 into the mid 1200s. I'll have a target of about 1250. So traders, silver is another story altogether. And to really illustrate that, first let's take a look at this weekly chart of gold. You can see that we definitely had an engulfing bearish on our weekly charts. We also had dark cloud covers on our daily charts, which is actually what triggered the action to get out of both our long gold and our long silver earlier this week. Now contrast that to our current silver chart. Let me go ahead and pull that up. And this is also a weekly chart, but rather than a red candle with any kind of a size in it that creates any kind of an engulfing bullish or any real bearish pattern, all you're getting in silver is an extreme range culminating with a doji candle, a star candle, meaning that the open and close are relatively close together, a couple of ticks apart, and that, of course, is following this 4-week rise. But we saw this dramatic increase today, really taking up a lot of these lows and slacks that we saw come into the market earlier this week. In other markets that we follow, Dow Jones Industrial Average, although closing nominally fractionally lower on the day, broke that sound barrier this week as it ran through 20,000 in terms of the index. In fact, we're going to close well above 20,000 at 20,093, and all of the major indexes actually closed at new record all-time highs. Standard & Poor's 500 being one of them, closing at 2294, down a little bit, but up substantially on the week. And the big mover has been the NASDAQ, that tech-heavy index, closing at 5164. That is a new record close for that market. Now, a dollar closed slightly higher on the day, but has been moving up over the last 2 days. And the question is whether or not the recent fall in dollar value is something that we'll see continue going into next week, or if we're looking at a pivotal reversal here in which we'll now see the dollar return to its mode of strength. Any way you want to take a look at it, Dow Jones Industrial Average closing at an impressive milestone breaking move above 20,093. This, of course, is a weekly candlestick chart. These are the former tops that came in last month. We talked about the fact that what it appeared to me was a rounded top, and we were certainly getting that, but we can clearly see that this week's activity has definitively broken above that top and telling us that we could absolutely see this market shoot to higher pricing. Because if you look at the overall way that this market has been moving, you get that price ascent, and it's dramatic, and then you kind of get a period of time in which the market trades sideways or stabilizes, and then you get another price increase to a new all-time record high. You get that sideways activity. This is the election of Donald Trump right in here. And then you had this accelerated move up, and then you had about a month of the market really finding some real resistance right at 20,000. But this week is different. We've got a dramatic follow through. I am looking for the Dow to move to higher pricing over the next couple of weeks. And traders, finally, the last chart that I do want to look at on today's show is a weekly chart of the dollar index. Absolutely no doubt, right at below 104. We got a real strong set of headwinds, some technical resistance in the market. Then we had 1, 2, 3, 4. This is the fifth consecutive week in which the market has closed to lower pricing. However, the one thing that we're seeing on this week that we have not seen, and we'll really need to blow this up a little bit to illustrate that point, and that is the fact that we had a tremendous tail, which is very, very indicative of a market that intra-week comes down and tests new lows, in this case just above 99, but then at some point during the trading week, buyers come into the market, and whether it's due to short covering or initiation of positions, you get this flurry of buys coming in, moving the market back up near where it opened. And that's why you're getting this doji-like candle, very, very star-like candle because of the small body size. That could be an indication that the dollar has found support in this area. On the surface, though, I do believe that there's still a high probability that we'll see further erosion in the dollar index. There's no doubt this first week of President Trump has certainly given us some insight into the potential of what we will see in the weeks and months ahead. We have certainly moved into a risk-on environment, and that risk-on sentiment is now based on more than just optimism, blind optimism, but based on the fact that we have already seen Trump within his first week begin to strip away some regulatory legislation. The Keystone Pipeline is one of those examples. He's talked about major infrastructure projects, that of building the wall. And so we are seeing some of these pledges and campaign promises actually begin to convert into policy. And that has certainly put some pressure on the safe haven assets such as gold and silver, and certainly moved the U.S. equities markets to higher ground. It'll be interesting to see how this unfolds over the next couple of weeks. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for another daily update and review.